All right. What is going on, Discord family? And welcome back to another episode of Mark. Today is March, April 2nd, 2025, year of our Lord. And of course, you guys know the deal. We'll be reviewing the S&P 500, the Dow Jones, the NASDAQ, and the volatility index. And today was somewhat of a quote unquote doozy type of day, but we were prepared for it. We took some W's, we took some L's. We're going to discuss all of that in addition to reviewing our pre-market plan and seeing how we did, and we'll get you guys out of here. The market is currently still open, so everything I do is still going to be in live price action, right? But anyway, we'll start over here with the plan for the S&P 500. Current conditions, we were in the markdown phase, right? Like we were pushing down. My thought process was, if we can break through the previous day low, I would officially say we're in markdown, but we were headed toward the markdown. Essentially, we were having a bearish retrace, though. That's what it ended up being. We were bullish as long as we stayed above 53.33, right? And we did. We were bearish as long as we stayed below 57.79. You can see we came up here, aggressively pushed up to the 40s, but never broke above 79.75. I said bears are back after 8 hours of consolidation. The overnight bears appear to have made the high of the day in London. I'm gonna put an asterisk by that because I'm gonna go over that. As long as we are below the previous day high, I expect to see more downside. Look to trade the range until the range is broken, and then target key levels only for longs. Okay. So after I wrote this, I thought about it and I said, well, I zoomed out and I said, well, have we broke the previous day low? The answer is no. So when we came into the Discord, I clarified here about the high of the day. And I said, hey, what I've noticed about London bringing the high or the low of the day, if we're in a range, they will show you the high from London inside the range, and then they'll run that shit, right? Or vice versa, they'll show you the low, and then they'll run that shit. Damn, I think I missed my entry. But that's exactly what happened, right? They trapped a lot of people with the London high being set, right? So when we ran London high, when we came up to London high, they trapped a lot of people not understanding that the structure is still in a range, right? Even though the market is putting in a high of the day, the market New York can run that because, like I always say, when the market goes in a range, we kind of do whatever we want, right? So what was that range? 56.9425 to 56.66 at the high, right? 56.31 to 55.98 at the lows. We had our extreme bullish plan that never got triggered. Super extreme never got triggered because remember, I was bearish going into the day, right? But I was bearish if we came back up here, not down here, just to be clear. And then our extreme bearish plan worked out to the T, right? You can see we were discussing this in WAG the last 2 days, right? We talked about the market getting very bullish in the month of April, and so far it hasn't disappointed. And we've been calling out these levels perfectly. We also hit our weekly projection today on a Wednesday, which means turnaround Thursdays. Anybody? I don't know. We'll see. But 57.39 through 57.20, 7.5 was the INWAG. I was looking to short weak rallies into this area, targeting first the top of the range, the daily fib, right? We never hit that. And then the bottom of the range. I actually took this trade and I did not hold it to the top of the range. I got out, I think for like 20 points or something like that. It was a really clean trade. But you can see right on the money, the high of day, right? What is the high of day? 57.3925. What were we looking for? 57.39, right? Pre-market plans, when they're done based off structure, are very, very nice, right? This won't be the final high, though. It looks like the bulls are going to try to run this for the PM session to set the range for the PM session, but we'll see. But yeah, so that trade worked out perfectly. So let's come down to lower time frames. I'll discuss some of the trades that I took on the day. I'll tell you exactly what I was seeing on the day, right? So we come all the way back down here to these lows right here. I mean, this was textbook, guys. Like, this was mother-loving textbook. You see this trade, you take it 10 times a week and twice on Sunday, okay? So, you know, I always enter on the 30-second time frame, and, you know, I've been practicing taking this 30-second opening range breakout, right? And I don't use it kind of like a breakout. I mean, I guess I do, but I don't. It depends on where we are in price. But today was the perfect day. If you just draw a line from on this 930 candle from high to low, right? All I did was waited for this. I already looking to go long if we trade down into 929.30. We get that doji candle right there. I entered at 56.16. I got out at the daily fib right here for 30 points, give or take. And then the market proceeded to go right to all of my targets and some, right? It gave me everything you wanted and some, right? It just kept going, kept going. But if we look and see what happened, right? The market already had displaced that night almost 80 points to the downside, right? Like, so the idea that we were going to keep going down without going up first, it's crazy, right? It's crazy, in my opinion. So, of course, I was looking for longs, all right? So let's talk about some of the losses, which I think are important. I didn't take any losses in my funded, which it doesn't matter. Losses are losses, in my opinion, right? So let's talk about some of the reasons why I went short, okay? So when we got up here, right, and this is something that I'm trying to like really try to remain disciplined about, but it's very hard because the candlesticks are hypnotizing, guys. In case you haven't wondered, you haven't figured out they're hypnotizing, right? So we get up here to the daily fib. Of course, I'm chilling. I'm like, whatever. If we trade up into 950, I'll look for shorts, right? We traded up into 950. I took the shorts right up through here. The market came down for about 10 points, maybe. I don't even think I got short here. I think I got short here, right? Yeah, I think I got short on this side of price. Market came down for about maybe 5 points and then was like, bye-bye, bro. Wrong answer. Stop me out there, right? I ended up getting back in because we traded up into the 1050 macro. Yeah, I got back in over here and I got in on this side of price at 56.84 or something like that. Market traded down maybe 10 points. And then I went to the bathroom, came back, and I was smoked. And I was like, okay, no more shorts, right? Because what did I miss? What is it that I should have done, right, with my entry criteria that I didn't get on this trade? One, I hate shorting the market. Let's put that out there. But when you short the market, you should wait for certain things. For me, right, I like to wait for certain things to happen unless I'm at a key level. The things that I did right outweighed the things that I did wrong in this trade by on these two losses by far. And I think that's important because a lot of times we beat ourselves up about like losses, but like focus on the positive, right? Shout out to Valdez. The one thing is I didn't wait for the lows to break on none of these trades. Like I didn't wait for the structural shift of the market, right? We never had a structural shift to the bear side. And I was shorting at the highs, which is fine. You just got to understand what you're doing, which is scalping the market up here until we reach that PM session, potentially where the market could come down. Now, over here was a little different, right? Over here, I took an additional trade. I said I took 3 trades, but I forgot I took this 4th one, like literally just now, right? But over here, what did I do? I waited for the market to break structure at 57.29. When I saw us coming down like drop base drop, drop base drop, drop base drop, drop base drop, I was like, okay, I'm going to short this, right? As soon as we get a clear break. This right here is what I didn't wait for the entire time when I was shorting the market. A clear break of structure, right? This is what I missed. This is all. When I was talking to Marv and he was like, well, you know, that's a break of structure. I'm like, nah, you want to see clear candles breaking below the low, right? Once we got that, as soon as we came back up here, I knew that there was a strong possibility the market wouldn't come back up here because we already built structure. So I said, okay, I'm just going to take it at 57.30. I'm going to put my stop above 57.35. And if we sweep 57.35, I'll still look to short, right, above 57.40, right? In this situation, that worked out. I only had to risk $500. The market went straight to my profit target. I got out. I made like $2,000 on this trade inside of a combine. I was down $700. I ended up leaving the day green plus $1,300, right? So never give up, right? Or continue to take your trades, right? That's one thing I stopped doing too, is locking out my accounts when they turn red for the day. I don't do that anymore. Instead, I just wait for my setup and I utilize my discipline, right? So my next trade usually comes around between 1 and 250, right? So I watch the market, and if we're in an area, we're still rallying, I'm looking to short it, right? If we come down, I'm probably looking to long it. So in this situation, it was a good short. So kudos to me on that one, right? So, but ultimately, the plan worked out perfectly for the S&P 500. Let's move over to the Dow Jones, in which, you know, the plan over there was super saucy as well. We talked about a couple things, right? Like, again, I don't handwrite any plans for anything but the instruments that I'm trading, but you can see it's the same thesis. We traded down, we tapped perfectly into our chessboard, right, at 41,904, right into the morning, right? Let me come down here to the 5 minutes so you guys can see it. It was the exact same setup, right? We went up, we came down for the retest, got that doji candle, 41,897, straight to the house, right? Right into the weekly fib, right? Pushed aggressively into the weekly fib, pulled back into the top of the range, breaking retest off the highs and lows, pushed back into the high, and then we had this daily supply zone, right, that I was telling you guys about on yesterday, I believe. We found this yesterday, and I was like, when the market comes up here, it's probably going to fail, right? And just so happens, it came up here today. It failed. We broke the structure. Now we're bearish again until we get back above 42,450. Okay. Plan worked out to the T. Shout out to Mike because I'm hoping he killed this today. You know, I'll talk to him later, but he trades the Dow Jones. I know Malik trades the Dow Jones. So hopefully they killed it, man. But again, this is one of those trappy days. If you just only think of the market inside of a range-based mentality, right? You need to start thinking of the market outside of just, well, the market always is in a range. Like, no, it's not always in a range. It expands from time to time. It manipulates from time to time. And it will behoove you to learn how to trade both the range and the expansion, because a lot of people end up getting smoked on days where we expand aggressively, right? Expecting the market to do what? Trade like a range. We expand, so as soon as it gets to the highest point, we all go get short. Right? It expands, so as soon as it gets to the lowest point, we all get long. But if it's a strong expansion, find yourself tools that make for a clean market observation tool, right? Like something that monitors the strength of the market. And we'll go through that here in a second. Over here on the NASDAQ, right? Like this shit was super sauce. Chessboard, in wall, double bottom at the open, right at 9:30. It's go time, right? We all got long at the same place on our respective instruments. I don't think anybody in Discord missed this trade, which was dope. Because you could have just wrote it right to the top of the chessboard. I mean, NQ got up here so damn fast. I wish I would have took the trade over here, right? But we got the break of the high of the chessboard. We got the retest of the previous day high and the top of the chessboard. Easy long back up to the highs. Almost pushing back into the weekly fib. Didn't get there, but we got that candle at the highs. And then it was straight back down the hill, right? Straight back to the top of the range. Still holding bullish, in my opinion. We're just kind of balancing out in this situation, right? So you can see that the NASDAQ was very, very clean. And let's move over to the volatility index, because this is what I use to measure the strength. If you've been in here any amount of time, you know this, right? We talked about this fair value gap right here yesterday. I said, I'm okay with the market selling down, right? Or the VIX selling down as long as we hold this fair value gap. Well, we're dancing around in it, right? We're dancing around in it. We're back into that fair value gap on the 4 hour. If we can hold this fair value gap, it'll be right in time for turnaround Thursdays, right? I always talk about these days of the week, right? Like you can look at the statistics and you can see that these things happen on certain days of the week, right? So hopefully we can get a bounce out of the VIX so we can look to continue shorting this market tomorrow. I want us to almost go like, I don't really want the ES to go much higher than what it is right now, because we've already nailed in our weekly projection for the week, right? So my thesis this week was that we would go up to the weekly projection early by Wednesday or Thursday, and then we would spend the rest of the week coming back down to the low of the week, still remaining bearish, but giving really, or opening up the floodgates for the bulls to step into the market, right? But that being said, that is basically everything I have, right? Like the market's still open. So I wanted to knock out this market review because I did have a couple obligations that I needed to get to. So I hope you guys enjoyed this. Let me know if you have any questions, post them in the video and or in the Discord. That being said, this is the market review. My name is T Hobbs. We'll catch you guys on the next one. Peace.